Morning, guys. So I'm here to do a gold trade review. Today is the 29th of November, 2024. I'm on the daily chart and I was trading the London session here on gold. So basically I just did like a quick scan on the daily chart, took a previous day's high inside that daily fair value gap to the downside, which is a CB, right? And I was just waiting for like a small retracement. Already I'm looking at this as a premium, right? Premium, right? We just took our previous day's high inside that fair value gap, so I'm anticipating a small retracement back inside the range. And it's Friday and we just opened, we cleared previous day's low and we rallied. I can already see the strength, but with that significant buy side being pushed and inside that fair value gap on a daily, which is an imbalance, it's always good to anticipate lower prices, but time has to align, and then also a smaller time frame market structure has to be alignment with that before has to confirm what I'm, my anticipation before, I execute. So let me go now on a 4 hour. On a 4 hour, this is the same daily CB, but here we have two, so we have one and two, right? And I was looking at that bearish order block, and obviously I extended out that week, to the downside because it was then the right time for me, and that was the PDR that price was currently on. So I extended that fair value gap all the way out, and as soon as that candle closed, I was studying the 1 minute market structure. So let's go to the 1 minute, and then also I was looking at time, right? So this is when we hit that fair value gap on sorry, that week, which is a gap obviously on the 4 hour of that, the week of that order block, right? It's when we hit that, and then this was a bearish market structure shift. Now London begins at 2 o'clock, but I'm comfortable taking a trade after 150 because of the macro, right? So I was watching that retracement up to that fair value gap after that bearish market structure shift there. I'm watching that, and as soon as I saw that, okay, now price was, it left that fair value gap with a volume imbalance in there. That volume imbalance with the fair value gap, I was watching this candle here, and as soon as we went all the way up inside that fair value gap and that volume imbalance but failed to close bullish on that, I executed on the next candle because I was then inside my macro. If you look down here, that's a 204 candle, which is a macro, and I could see relative equal lows down here. I could see these relative equal lows down here, which was my target short term, because also this is the bearish market structure shift swing low. So that's like my low hanging fruit right there. And I was watching that retracement because, excuse me, I could also see these nice smooth lows, close to midnight open. Midnight open is somewhere here, so that we're not there yet. We're not there yet. We're still trading above midnight open, which means I'm still at premium. And then I was just, happy to take that quick scalp to the downside. Now I'm going to show you my annotations. There we go. So this macro basically when it opened after that bearish market structure shift right there, when it opened at 150, it did not have buy side, right? So we traded inside this fair value gap here, 152, went above these relative equal highs, and then once we broke below it, I executed on this candle because now we were breaking, we were respecting that fair value gap. I was watching the CE. The fact that we failed to close above CE right there, that indicates, bearishness to me. So that's what I want to see. Failure to trade at the upper quadrant and close at the upper quadrant of the fair value gap. That's how I know I'm with the right fair value gap. Then I'm happy to take either the next trade, the next candle, to the downside, or I can use like a bearish breaker on a retracement and leave that to like that fair value gap will serve as my confirmation only, not for me to execute on, because I want to I need confirmation. That was confirmation for me. That's why I took the next following candle. Boom to the downside, and this is south side liquidity all the way down here, and we sort of was targeting, went all the way down, and I was happy with that because now a new macro was coming in. Now you, on a bigger time frame, I'm trading this as a retracement. I am very much aware that price is pretty much strong and it's bullish, so this macro could initiate now a new move to the outside, so to the upside, you know, could initiate, because this is just a retracement macro. This could be a continuation macro, because the macros serve as, you know, it's could be a continuation of a hard time frame structure, but also it could be a continuation of what already is priced in here. So you need to just stay out, and then you study the first 20 minutes, and then you can trade that. So as you can see here, the 250 macro generator only opened 250 somewhere here, somewhere here. There we go. So we opened, generated sell side liquidity, and then it swept the highs, relative equal highs here, reclaiming that fair value gap. And then after that, this change in state of delivery confirmed this as, you know, to be your ICT silver bullet, because silver bullets are actually a continuation of whatever program is in most cases. So silver bullets are a continuation of whatever program is in, and this was a good opportunity to sell and take it lower to relative equal lows down here. And also you can see how the midnight open was confluencing with that fair value gap, and the fact that this candle here that made it to the ICT silver bullet fair value gap did not close inside or above the upper quadrant or above the CE of this fair value gap, that also was very much indicative of, you know, it was indicative of heaviness. So there you go. And then this is just reclaimed CB, and then I think now next is this ICT silver bullet here. Look at how that candle failed to close above midnight open again. This is also indicates heaviness in price action. So it's just a quick small review. Nothing hard on this. So now I'm gonna go on and show you my executions. Obviously this is my trade of 8 account, and sorry, I don't have any positions on right now. That was my execution right there. So this is not Photoshop, and that was my execution right there, and I bought back in when this macro was about to begin, and already we just purged, you know, the sell side that I was targeting below midnight open. This is midnight open. Below midnight open, I had this sell side liquidity. That's why I went out right there. Beautiful stuff. So I just sat through this silver bullet, and I was just tape reading it. I'm already done for this morning. I'll see you, you know, the Discord guys. Maybe I'll be live on my Discord later. So you guys need to come join the Discord channel, because this is where I share even the breakdowns, you know, what I was anticipating. Even though I did not go live, I do share my screenshots, you know, for your study. I might not be able to share every screenshot with on my Instagram anymore. I don't really post them on there. So you just come to my Discord. That's where it's at now. Okay. I'll see you guys on the next one. The macros are liberating. Stick with the macros. Your chances of getting a winning trade will skyrocket. All right. I'll see you on the next one. Cheers. Ciao, ciao, ciao.